winds were indicating that. With that, let's move over to another company that posted numbers, Star Cement. But this one was a somewhat subdued set, at least vis-a-vis expectations from cement companies. Operating profit was down around 16%. Margins have also contracted, coming in at 17%. Sanjay Gupta, CEO of Star Cement, joins us now. Good morning, Mr. Gupta. Thank you very much for joining us. Well, the disappointment was more because, we were expecting that your grinding unit will start. Sales volume only 0.9 million tons. That is a 3% growth YOY. Is this the number first? Can you confirm? And why is it not better than this?
No, I think the number is right, Lata. I think we have done 9 lakh ton. That's the quarterly number. But yes, in FY21, the volume have been muted, largely because of a few developments which has taken place in Northeast. We had faced 2 major bridge damages in the month of from November to I'll say January. So it took a lot of time in terms of repairing those bridges and then resuming our supply of clinker, which is largely our clinker plants are based out of Meghalaya. So that impacted the volume. The grinding plant at Siliguri actually took time because of the ongoing pandemic, and we could only start it in the on 16th of January. So largely an initial 1 or 2 months we had teething problem. So I think this quarter as well as the number for the full year actually reflect a lot of one-offs which we have never faced in our entire history.
Okay.
So that has impacted in terms of volume and as well as in the markets.
Okay, so can we assume, Mr. Gupta, that the Shillong Pass bridges are back to normal now? Are they serviceable? And therefore, will there be these kinds of supply side logistical problems for Q1? What is your estimate of Q1 volumes?
So largely all those bottlenecks have already been resolved. There is a new bridge which has already been operational. So most of the logistic issues are resolved. We also seen in the last entire, I'll say from November onward, we have seen a lot of freight cost pressure because the freights have gone up because there were only few small supplies which was coming in. So that has also impacted the overall margins. But from April onward, most of the things have been resolved. The freights have normalized largely. So hopefully we will be doing at least a double-digit kind of a volume growth in quarter 1.
Double-digit volume growth in quarter 1. All right, that's good to hear. What about pricing? Can you give us some trends on what pricing has been so far and what kind of expectations would you have over the next 1 to 2 quarters?
So pricing in fourth quarter was stable. I'll say it was with some amount of an upward bias. In quarter 1, the prices are, as of now, they're maintained. There is small decline of, I'll say 5 to 10 rupees in eastern market, which is largely in Bengal and Bihar. But Northeast prices are absolutely stable. And you'll be surprised to note that the entire Northeast are actually, overall, they have the market has grown at around 7%. And as compared to all India cement growth of around, very muted growth of around 1 or 2%. So we are pretty hopeful that East will, in terms of demand, it will do much better in FY22. And prices look stable from here on.
Okay, so prices look stable from here on. Freight costs have normalized in the last quarter. What does all of this mean for your EBITDA per ton? Can you get back to that normal range of 1200 to 1300 rupees per ton anytime soon?
So FY21 we have ended with 1350 rupees of EBITDA as compared to FY20 of around 1500 rupees of EBITDA. So we hope to go back to 1500 rupees kind of EBITDA, which has always been EBITDA for last 3-4 years. We hope to come back to 1500 kind of EBITDA.
Okay, that's good to hear. Any inorganic growth?
No, I think we have just started the Siliguri plant, 2 million ton. We have already set up ourselves for 3 million ton. We are setting up a 3 million ton clinker plant in Meghalaya. And there is a WHR plant which is also coming up around 13 megawatt. So all this is already lined up and we are already working on this. I think the entire 3 million ton plant will start, will be commissioned within 3 years.
No, I asked,
WHR will get
Mr. Gupta, I asked because I think you have 500 crore of free cash, right?
Yeah, we do have free cash of around 500 crore. This year also we have generated around 360. The EBITDA were around the cash generations are around 300 crores. But we will be utilizing this toward the organic growth. As of now, there's nothing on the platter in terms of inorganic.
All right. We'll leave it at that. Sanjay Gupta, pleasure speaking with you. Thank you very much for clarifying some doubts for our investors. Okay, with that, we've got a green screen facing us, Anuj.
Yes, it is quite green, and the stock that's leading the market higher is Reliance, up about almost 1%. There's some contribution from a couple of banks like IndusInd Bank and SBI as well, and some from HCL Tech. But let's take the 910 call. Sudarshan, if we open here, do you trade the index, and what's the 910 call?
Yes, you trade the Nifty, wait for a minor intraday dip or a consolidation and go long in it. NTPC is a buy with a stop at 115 and a target of 122.
Okay, NTPC is a buy. It's been a strong stock. It's been a strong sector actually. Both Power Grid and NTPC this month are up 8 to 10%. Mitesh, what's your call?
Yeah. So I've been recommending power stocks as well, but today I think we'll go with an NBFC. L&T Finance I think has come down to support areas. So 93 half being the stop loss, 9900 could be the target here.
Okay. By the way, Anuj, this month Tata Power is up 20%.
Yeah.
And Adani Power is up 70%. So, I mean, there is, of course, it's very much a power-oriented month that we have seen. We'll discuss that later. First, what's buzzing in the financial space? Abhishek, tell us.
Well, Max Financial is on radar, Lata. We are seeing brokerages upgrading the target price over there. So Jefferies has written a note. They've increased the target price to 1200 from 1040 earlier. They believe that strong premium growth and margin expansion is the key highlight that they saw in Q4 results, and COVID-19 claims impacted sequential margins. So they expect value of new business to normalize a bit lower than earlier estimates. So they raise VNB forecast by 2 to 4% over the next 2 to 3 years. They expect 18% CAGR on value of new business over 21 to 24 with ROEV, that is return on embedded value, at 21% next year. So Nomura has also increased the target price to 1200 from 1050 earlier. They believe that Max is the best in class in terms of surprising across metrics. They have mentioned that Max continues to gain market share. 110 basis point is the increase in market share over the last 2 years, and value of new business margin is now best amongst peers as well. They have raised valuation multiple for Max Financial, and they estimate 26% long-term VNB margins along with 17 to 18% CAGR in annualized premium equivalent and VNB over FY21 to 24. Back to you.
Okay, thanks for that. And now let's find out what's afoot in the oil and gas space. Sonal is here with more. Sonal?
Well, I'm watching out for GAIL today, Sonia, because remember the company reported numbers at around 3 p.m. yesterday. The numbers were good, so revenues were slightly lower than the poll, and that was because of lower revenues in the GAIL marketing segment versus the poll, but it was a good performance operationally. So if we compare it with the poll, margins came in at 16% versus an expectation of 14%, and that was driven by the petchem segment. Net profit also higher than poll at 1900 crore rupees versus 1736 crore rupees. The brokerages, they are bullish. JP Morgan says that GAIL should continue to benefit from higher oil prices, something that we have been highlighting. Gas trading and petchem reported multi-year high EBITDA this time around. GAIL is a beneficiary of higher oil price, and that's why they remain overweight on GAIL, and they have increased the target price to 197 rupees per share. FY22 earnings by 5%. However, the key risk